Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Friday, May 5th, 2023. Before I click the charts, just want to ask you to please click like if you haven't already. It helps us get found, if you will, on YouTube. People search for us. If our like to view ratio is high enough, it skews us more in being found. So we appreciate every like. Also, subscribe to the Wicked Stocks YouTube channel. You'll be provided notification each and every time new content has been uploaded. That includes the daily Apple and daily Tesla report. So this is the big picture. No need to remind you. 220.62 long-term resistance that if tested over the next several months, able to contain quarterly, possibly annual buying pressures, and below which, by one measure, you can say Tesla remains in a bear market following the all-time high from November of 21. Now, in the interim, I'll just take you back here about a month. We had a sell signal below this channel structure that is now well above the market that indicated the 150-142 channel bottom, which we tested about a week and a half ago, has held so far. The 150-142 all the way down to 146.06 level, which is a 5/8 Fibonacci, downside Fibonacci from the January low against the February high. That range narrowing gradually, able to absorb selling through June, and above which the low 200s in reach right here. Actually, it's now the upper 190s in reach over the next I'm going to say 3 to 5 weeks still. I still think that is the likelihood. And in fact, if over the next few days we can close above 168.67, I think we've got a good May low. And within 2 to 3 weeks, we can push on to 199.90, which remains an objective anyway. I'm going to say by the end of June or sooner. And that's a little bit more than 3 to 5 weeks. It gives this market time to sort of play out what's happening right now, which is topping out in the upper 160s, falling back into the low 150s. We could fill this wedge out all the way through next week. 150, 142 remaining decent pullback support that if or when tested, if you're a short-term options trader, meaning 3 to 5 days, couple of weeks at the most, you could reach for 167, 168 out of the money calls that don't expire for at least a week. Inversely, if we test 168.67, you may reach for 151 out of the money puts that don't expire for at least a week. You could trade inside this area for the next week or two. Now for the day itself, in terms of upside resistance, I do have 162.48. I just have that as a mere minor point because in terms of pivot point quality, I'm still deferring to 159.81. This very short-term channel bottom we've been plotting along now for the last few days. I still have it as intraday, above which we may actually reach 168.67 intraday. And if you want to use 162.48 to the upside as your signal for 168.67, you certainly may. I think that is a valid approach. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. In terms of downside, though, I'm not comfortable playing the short side today unless we break or open below 159.81. And if we do, we may well, being a Friday and all, usually a higher volatility day, actually test 150, 142 on an intraday basis, where once again, profits can be taken if you sold 150, if you sold the break or open below 159.81, you can take profits here. You can also enter a long position, not only for the day, but actually through June, as I said earlier, because above this zone, we should, by the end of next week or sooner, test 168.67, and by the end of June or sooner, reach into the 190s. And as I said a moment ago, I don't expect to see it today, but if we close above 168.67, we should, over the next 2 to 3 weeks, push into this targeted zone of resistance, presently 199.90, and able to contain monthly buying pressures when tested. I think the last thing I will say, and I don't expect this today, we do, well, I think I kind of babbled my way through it yesterday, which is to say, if we close below 151.42, yes, that is a sign of weakness as we spill into June trade. But in terms of being an aggressive short seller of this market, I'm not comfortable doing so unless we close below 146.06. So I'll let you play it as you see it. I think you can buy 151.42 all day long, all month long. Closing below 151.42, there is a case to be made for bearish continuation. And you may then, if you've been reaching for, I don't know, the 169, 170 out of the money calls, as I've been saying for the last week, or the 200 or 195 calls, as I've been saying for the last week or so, if you've reached for those, if you've purchased them, and we close below 151.42, you may liquidate them just for safekeeping, or for safe measure, rather. And then, of course, closing below 146.06, I do then have a pretty clear sell signal as we move into June trade. The following 3 to 5 weeks, then likely to retest this 101.81 low from last January. Now, closing below 151.42, if you want to play the short side and reach for 101, 102 out of the money puts that don't expire for at least a couple of months, that would also be fine by me. But once again, in terms of being safer than sorry, it would be a settlement below 146.06 that for me would clearly define that as our next big picture objective. Until then, once again, this is bottom picking territory as we move into June trade. You know, I think I have said it all for Friday's Tesla report. I'll be back Sunday afternoon with Monday's edition. You have a great weekend.